Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by Eric Shamilov, coming to you live this morning. A lot to talk about. But really the market kind of is the same as what it seems like almost every single day. You know what happens? I think they forget that the market went down. So like the one down day you get every like 3 weeks or 2 weeks, they forget about it in like a day. So here we are. Again, it's funny. We spoke a little last night, and I was saying, what's interesting about this market is like you can't come up with one thing, whether you're looking on the board at macro thematic stuff or we're not getting really government news, but just news around the government, whether it be ISM numbers or Challenger numbers or any number that looks really good. The election stuff didn't look so great. Obviously, this tariff thing is a really big problem that again, I don't understand. Like, it was funny. We talked again yesterday about, the arguments were done. It's in the judge's hands. Stuff is leaked out all over the place. His own judges, that he appointed, etc. But yet the ruling somehow isn't out. So, I don't know if we're going to see a written opinion today or it takes weeks. I have no real idea, but
It could
anyway,
take longer than just today.
I thought you said it was coming out yesterday. That's what you told me.
It was, I
You know,
thought it could, but the deeper I dug, I'm like, it could be up to 2 weeks. It could be even longer. I don't think anybody really knows.
no, but it's not looking very promising. But
No, definitely not. And every time a justice would come out against it, the market would like rally a little bit more.
I didn't see that at all. I saw at the end of the day there was negative comments about that, and the market sold off 40 handles in basically 15 minutes at the end of yesterday's trading day.
So
I
it's
don't know.
interesting. You think if they strike it down, it's actually negative for the market.
Highly negative, highly negative, highly negative.
Why don't you explain that a little bit?
Yeah, I think that it's not even because if they strike it down, it's not going to be struck down. He's going to use other tactics to keep it going, which may violate laws, etc. They're going to just push this down the road, and it's just distracting. But if it doesn't go, Eric, every country, dude, listen, they're doing the hyphen dance in all these countries right now, dancing around, laughing because they never did a deal with us. They never are obligated to anything. So really, they all look like geniuses. And listen, I look at a lot of different things, and like today, it's like the anatomy of what I call a rig. So yesterday, believe it or not, the market closed up in Nasdaq. Guess what stock was the worst performing stock on the board? Yeah,
Nvidia.
right. Which Nvidia is what? The biggest stock in the world. Okay. The biggest stock in the world dropped 6 points, and the NASDAQ was green over 100. Okay. This is the market we're in. And then what they do is they go, oh, you know what? That was down a little too much. So we can buy that back today and let's sell our Apple that we bought yesterday and we'll roll in and out. And it's just like the anatomy of a controlled rigged market. It's an amazing thing to watch this happen on a daily basis. Like I've traded for very long time, okay, over 40 years, okay. And if you saw the bellwether stock down big on a day, there is no way the market would be up. Okay, no way. But what they do, the rigs of Jane and all these guys, they basically they they do things with the computer that we could never do. So we could never know. Like they're running something going, if Nvidia is down 4, we can buy Apple and Tesla up $1 from here, and we'll keep the market in line. And that is where the whole thing is rigged, okay? Because it should we should not be coming to work, okay, on a down day with 5 of the biggest stocks in the world down, but 2 are up. And the only reason they're up is because the others are down. And then the next day they unwind the trade and go the other way. So this is all we're dealing with in and out, in and out. And it doesn't matter whether gold is rallying, selling off, Bitcoin going up or down, or bond yields, which we touched on yesterday, which are, doing a little bit better. Bonds doing a little bit better this morning, down to about 412 on the yield. But we're talking 412. We're not talking 395 or 390. And the mantra of the Fed is cutting and they're easing and this is off the board. So, I'm just thinking that nothing really matters to the market at all. It doesn't matter what it is. It doesn't matter if the government stays shut for another 6 months. It doesn't matter, if TSA isn't showing up to work. And no, someone was saying, I was talking this morning to a buddy of mine. He's flying to California. He's dreading it. Okay. He's going to maybe go private because he can't even handle what's going to happen. He can't get there. So I don't know. It's definitely affecting people. And it's definitely affecting people that work in the government because they're not getting paid. And that can't be good, but it's a non event. And, the market, listen, I happened to be up last night. It's the same trade. We come out, market trades lower, look skittish, everybody's nervous. Asia opens kind of lower, comes to flat, market rallies up, 2:33 in the morning, market goes back down because Europe opens up, goes back to the low, and then you see from, and you could probably pull a chart from 3:30 in the morning till now, the market has done nothing but slowly go up on no volume. So here we sit. I was hoping for a good trading day today. I still think you may see it, but again, it's the same story. And what's really interesting to me is if you look at put prices every time the market goes down. So last night, okay, the 6710s, which were basically 100 150 points out of the money, 2.5% or 2%. They're 3.5 bid last night. Okay. What do you make of that? We haven't had a down 3% day in 8 months. So is it that they're worried that it's coming, or I'm not understanding what are those puts going to do for you? Those are, a 3% down move is a full out crash. They're going to call the Air National Guard and shut the market if we go down 3%. I mean, so that's what I'm not understanding. Even you saw it last night, the same kind of trade, not last night, the night before, off the down move, VIX went to 20 and a half overnight. Then it goes back to 18, 17. Like they,
Yeah, I think everyone's worried about tail risk, and that's why every time there's a little bit of turbulence in the market, they I think everybody goes for tail risk. It's like
yeah, but I just want to say this. I'm not disagreeing with you, and I'm agreeing with you, and I fully believe in, hedging your book with tail risk. I recommend it, okay? Meaning that would be buy an out of the money put, that's fairly far out of the money for not a lot of money to just protect you in case the market really collapses. But can I tell you something? Buying today's put last night is not tail risk. That is not tail risk. Getting less than 1 day protection is throwing your money in the toilet, okay? Because you can buy a 3 week output, 3 weeks out, that's 10% farther out of the money, and it'll give you way better protection. Buying a 1 day option is just basically, it's like a one in a million. You know what I'm saying? And to not own that is probably a better thing because it's not going to give you, listen, if we go down and those puts go in the money, okay, you're destroyed. Okay, we haven't had a down, dude. If this market went down 3% in a day, this place would be like. Do you remember the scene in The Wizard of Oz when the house gets lifted up? Okay, that's what this place would be. Nobody can handle that. You know it.
I
We've
think they're
seen.
also I think they're also pointing at specific events like yesterday, the Supreme Court hearings. Today, Tesla uh, shareholders are going to vote on whether to extend Musk the pay package, and
Are they voting today or did they, I thought they
today
had to be in
about
last night?
the afternoon. So
No, I
that's going
think
to be
this
a big one.
morning.
Whether Tesla's going to be able to invest into Musk's XAI, and that could I don't know if it's worth a potential 3% market swing, but
Tesla? Nah.
yeah. The other thing I think about tail risk, I feel like the psychology of the market right now, everybody feels like yes, the market has run away. Momentum is way too hot. There's potential bubble in the works. I don't know if anybody read the Ray Dalio article. I highly recommended, which I actually want to talk about. Uh,
Hey, Ray Dalio's your guy now?
he's always been my guy. He's always been my guy. I
I
mean,
don't know how. The guy got kicked out of his own company because they couldn't make money because he's been just so off. And
his approach, whatever. We could talk about it later, but the point is that it, it's everybody is understanding that things are a little bit crazy to the upside. Like they know the market shouldn't potentially be here. It should come off a little bit, but they're riding it.
a little bit,
At
a
the
little
same
bit,
time, they're afraid.
a little bit brings a lot. Not a little bit doesn't bring a little. So, I got two things I want to talk about. Okay. One, okay, I got a call from a friend of mine who's one of the biggest corporate attorneys in the country. Guy's done unbelievable. He used to work for me actually. And he called me right before we got on the podcast, and we haven't spoken in a while. We caught up, and he goes, "This is, he's an investor actually in my stock WZRD." And he's been happy. I don't want to jinx myself because you jinxed me yesterday. But he's happy with the performance. But I told him, listen, when the market goes down, that's when WZRD really performs. Okay. We should make a ton of money when the market goes down and volatility ticks up. This is the worst environment for me. But needless to say, this guy is in touch in the M&A world, and he literally said to me, he literally said to me, he goes, "How do I get short the market? I want to buy a 10x short." I go, "Those things don't work." I said you should put more money in my stock or buy out of the money puts. But my point is, here's a
Now
guy.
you're jinxing yourself. So you accused me of jinxing you, and now you're
I'm
jinxing.
not. I didn't say it. Listen, I didn't say it. He said it. I didn't say it
Okay.
about money. I would never comment about
Well, did
money.
you tell
But
him that he jinxed you?
no, dude, he's an investor. He was just stating fact. Okay, you're just looking from the sidelines. But anyway, the point of why I brought it up is here's a guy that's in M&A, in touch with everything, the biggest probably in the world, and he's like, this makes no sense. He goes, the buys that are going on are overvalued. The market is so overvalued. I don't even understand what's going on. And I'm getting these type of calls all the time. And it does, listen, the Jane Street rig can continue for as long as it continues, but at some point it's going to become unglued. And you talk about 3%. you know, I'm waiting for this one move where, we have that 2.5% down day, followed by a weak close and another 2.5%. But I wanted to bring up, you talked about tail risk, and I think it's an interesting topic. And I think the people watching today, should, get a little education on that. And, there are firms out there, and there's a guy, I don't know if people have heard of, his name is Mark Spitznagel. Do you know who he is?
I've heard of the name.
He's at Universal with Doctor Doom. I forgot his name. The PhD Talib. So him and Talib. Okay, you don't know who he is. They're the
Oh,
biggest in. They're the
I'm just
biggest.
like,
Can
there's
you?
only one Dr. Doom.
Yeah.
That's the guy that
What
worked
is
for
his name?
Solomon Brothers.
It's not Mason. Oh, Nason Talib. Okay, he.
Everybody's Dr. Doom. The original
No,
Dr. Doom.
no, I'm saying, but he's a PhD. Mario Rubini. I mean, that guy had to retire.
L'Oreal Rubini, yes.
Yeah, he had to retire. But anyway,
Because he hates Bitcoin. He had to retire because he was so
I
wrong.
don't know what he hated, but anyway, I wanted to say the interesting thing about Universa, okay, and Spitznagel, who's a billionaire, okay, all they do is load up on puts, load up. He's calling it 29 style crash. I mean, he's not saying like today, he always hedges himself, but they're loaded with puts. But during COVID, they made over $1 billion in one day. Okay. So that's tail risk. They just buy all these out of the monies, different expirations, and then they wait for volatility to spike and a down move to happen. And the funny thing is, this guy, believe it or not, if we correct 10 to 20%, he'll make billions, billions. This market is not set up for anything like that. Okay. You see it with your own eyes, dude. Every time we have any type of up move, they smash volatility. Who are these guys smashing volatility? I mean, I know it's computers, but who's doing it? How are you last night 20 and a half overnight and then you're 17 all in one day? You know what kind of percentage that is? That's a 20-25% move in volatility on a daily basis. I mean, it's really scary. And what we saw I mean, come on, you and I both saw it with our own eyes, okay? We had volatility go up 10 days in a row with the market up 10 days in a row. Then we finally had a 2% drop. 2%, that's pretty small, Eric, don't you think? 2%? You would agree that's not a really big down move, right?
No, no, that's
Okay. And volatility went to freaking 30 overnight on a freaking 2.5, 3% down move total. Okay. What is that telling you? And then it goes from 30 to it literally traded 15 3 days later. Why are they moving volatility 50% up and down on 3% moves? Is it that fact that people don't own this? People don't own it, they just sell it. Um, and
it's a
there's
it's a very tightly wound market, 100%. So that's what I'm saying. Like everybody kind of knows that okay, things are a little bit kind of funny looking, and at the first sign of distress, I think everybody goes towards protection. It's a
I,
very tight.
I don't see it. I think because why? Let me ask you this. That means they don't have the protection. Okay. So when you're saying on the first sign of something they're running for protection, right? Are you there, bro? What are you looking at?
No, I'm looking
You
at the
gotta make a
board.
trade. Can you make a trade on the air so they know
I'm
you're
not,
real?
I'm not making a trade. I'm looking for a trade. I'll tell you that. I'm looking for one.
No, okay. Well, let me just say this. They're under protected in the market because what you said really plays into this whole mantra, right? Why would they have to run and get protection on a 1% down move? They should have it. So they don't have enough protection. I
Right.
think that's crystal clear. I'll tell you guys out there a quick story. So I started trading. I don't want to date myself. I know I look really young, but I started trading in the mid to early 80s. And there was a guy on the floor. I started on the CBOE in Chicago, which is one of the greatest breeding grounds ever to to learn trading and learn options. That's really where it all started. There were options listed on the CBOE before there were even put options. They only had call options. So it was a I wasn't there
Wait,
then,
wait,
but
wait. They only had call options. No, you guys didn't. There were no
in the
puts.
70s, late 70s, they only had
Only
call.
calls. Wow, that's interesting.
Yep, and they listed puts, and then there was something basically called Black and Scholes, the model that was our pricing model back then, and that was where everyone discovered the inefficiencies. So, like if a stock is at 50 and the 50 calls are 2, sometimes the 50 puts were 4, and you had a reverse conversion where you had free money. They were locking in free money left and right, and then the model came out and basically priced options efficiently. But that being said, I wanted to tell a story. So I start trading, I'm clerking, and there's a guy, John Stafford, there who people can read about. Probably the most successful, or one of Irv Kessler and Danny Asher, um, might be the most successful off that floor. But, John Stafford was up there. John Stafford made so much money trading options. And then they started a firm called Ronin Capital, which you can all look up. Ronin Capital blew up short volatility in one day. They blew up all of the guys' personal money, everything. And you want to know what? 2 days later, they would have been up money on the trade. So that's what volatility can do to you. Okay. Obviously, that was an event, and that's when Spitznagel made all his money. But I think the market is wound really tight here. People are freaking out when the market goes down 1.5%. People are freaking out when Palantir moves $8. As
By the
long as
way, Palantir, I noticed was unable to rally yesterday, even though everything else had a little bit of a rally. What do you make of
don't
that?
worry, it's rallying today. So it's up today. So don't worry. That's part of the anatomy of the rig, right? So what they
You know what?
do,
I could see you testifying in front of the SEC or the Senate against all these algo firms. You would be
they
perfect.
don't want to hear it. They
You
don't
would
want
be.
to hear it.
We
They
got. We got to
honestly
get you
don't
in
want to
front of
hear
the
it.
Senate, man. We got to get you in there.
No, I don't listen. Let them do whatever. It's cheating and nobody cares. They're paying too much in fees to have anyone look at it. But it doesn't matter. Either way, it is what it is. Um, it's I don't know. It's it's a interesting market. So let's touch a little bit right now on some of the other markets. We touched a little bit on the bond market. I still think bond yields back up to 4.25 here. May give a trade to our subscribers on that. And I like that on the short side here.
Which one?
Shorting
Which one do you like on the short side?
bonds. I want to short bonds.
10 or 30
There's
year.
not a lot. 10 years. I'm not trading 30s. 10-year, most liquid, expresses the best opinion. Not
So
a
you
huge
think rates
trade.
are going even higher?
Yeah, I think they're going higher. So I don't like a trade you like that I don't like. I have not been short gold. I actually was long gold, and now I'm going to short gold above 4,000. I still think it has work to do. Oil is.
Our chat is confused. They think that you're short gold.
I am not short gold. Actually, I'm sorry. I am short very, very small gold, very small, which I put on late yesterday, but nothing really. And now I'm going to get a little bit more aggressive. But I am not short gold. And the way I'm shorting gold is through spreads, tight, GLD 2 and 3 point call spreads, selling upside. I still think that's in a bit of a downtrend. Oil's very confusing. Broke 60 on the downside again. It's really, talk about a commodity that, is kind of stuck. Wouldn't you say that thing is stuck?
Yeah, there's. I was looking at it yesterday. I'm like, there's no trade. Um, there's just no trade, and for me, there's no trade because when I trade oil, I'm looking at various parts of its forward curve, different parts of its calendar spreads, basically.
Hmm.
And the front end is doing one thing, the back end is doing something else, and usually that's a recipe for a no trade.
Yeah, I don't see much there. I mean, if it gets to 58, maybe you buy it against the 56.5 low. I think it has an inherent put to the downside because you gotta um you got to basically you gotta have some type of news to get it, really to move. And there's not a lot out there. It's well supplied, and there's not a lot going on. It's just it makes me believe that there's a lot of cross currents, and nothing really comes to fruition here. That's the thing that's really, So I just want to get very crystal clear. We touched on our opinion on the bond market, or my opinion. I think bonds are going lower in price, higher in yield. I think you're bullish gold. I'm not that bullish. I'm shorting gold
Yeah,
this
I'm,
morning.
I'm bullish gold. Also, don't forget, I highly recommend everyone read Dalio's piece from yesterday. But basically, and the Fed said this during the last meeting, they're going to be expanding the balance sheet, by the way, increasing reserves, injecting more liquidity. There's an issue in the repo market, draining liquidity. They're going to be putting a lot of that back in. Uh, and that's going to happen, I think, around Q1
Hmm.
2026.
Hmm.
That's bullish for gold. And maybe look, I'm looking at gold. I'm looking at March $400 calls, which $400 was the peak in GLD for March.
Hmm.
They're trading pretty cheap, you know. $400 calls for March are trading at like 7. You could finance that with like a 425 call, sell the 425, buy the 400. I like that trade. I might be putting that on today
For March.
for March and just sit in it. Yep.
You know what? I don't have a problem with that trade. The only thing I'll tell people out there, if you're going to do a call spread out that far, okay, and
Mhm.
let's say you do catch the gold move that you're looking for, your call spread will not expand. Those hedge calls, the 25s or whatever you're selling against it, will only hurt you with that much time, not help you. I like more of a pure play. They're not going to, like, listen, if you're going to sit for 4 months or 3 months, and you're not going to make a lot of money on that spread, even if it goes in the money by a lot. It's not, there's just too much time on that spread. I'm just saying, for me, in my career, doing that kind of stuff that long dated has cost me money and made me sit in trades way longer. So what I like to do, if we are going to do that trade, is what I like to do is, let's say we get the move we're looking for, then I turn that one by one spread, one long call versus one
Mhm.
short call. I'll
Mhm.
turn that in to a ratio. Now, I may not go, like, if I'm really neutral to negative off that trade because I got the move, I'll go 1 by 2 and then buy a way out of the money call just to hedge, the catastrophe upside risk or downside risk. But those are harder to manage and get the money out. I like to get more of the pure move, but it's not a bad spread. But I would at some point, when I felt like we had the full move in, I would get out of part of that position on some type of ratio. But it's not a bad way to play it.
I like all these adjustments that you're talking about. I obviously we adjust our option positions all the time. I think your subscribers would get a ton out of it with maybe like a product that goes really deep into like like ratio spreads and adjusting them and things like that. I think people are gravitating towards that kind of stuff. By the way, that's what I'm
Yeah, I
seeing.
mean, listen, it's a great thing to do. It's almost like trading outright, but you're utilizing the move to hedge out your risk and exposure. I could definitely go into that. That leads me into tonight. We're going to be having a webinar. I'm not as much fun on the webinar as I am here on this show with you,
No,
but
you're
I'm doing a webinar on my trading, and it's basically a product that takes advantage of news out of Trump, how he affects the market through, let's say, Truth Social. through calendar dates, that are certain. And I think it's an interesting product, and it's run off of my best trading product that I have. So I think there's a link here that you could maybe link to the webinar. But I think it's an interesting watch, and it's a product that we do very well on, and we make money with it. So I think people can watch, can watch that. So I just want to knock it out. I want to knock out the different markets, and then we can sidetrack and talk about different stuff. I want to be crystal clear. I gave you the thought on the bond market, the oil market, the gold market, currency market. Dollar is actually weak today, interestingly enough, and I don't really know why. Maybe it has to do with, I mean, I don't. I'm just telling you. I'm not. I'm sitting tight. I like. Actually, I shouldn't even say it, but I think my positions are good today, for now.
Jinx,
But
stop
but
jinxing.
nah, dude, I think my positions. I'm so hedged, but I think my positions are okay today. But I do think the market is disregarding. Why is the market disregarding every piece of negative news? Why? Why? I'm just
Maybe
trying to
because
understand.
the Fed is about to inject massive liquidity back into the market, start doing QE again, and they think the bubble's going to explode.
Dude, they're not doing QE. They're running off the balance sheet. That's why it all ran off. They're running the balance sheet off. They're not building the
Yeah,
balance.
and now they're going to be exactly. They're going to stop that, and they're going to start increasing reserves. And on
Wait,
top
that
of
came out. When did that come out? Out of the meeting a week and a half ago?
yeah,
So now you're worried about? You think that's in play? I mean, come on. No way.
that's kind of in
Dude,
the
we got
background.
to get through today. Our people out there, our people that are watching this, we just need to get through today. Okay, we need to make P&L and put a P on the page today. We need to make money.
Like
So
that.
I don't care about the Fed running off the balance sheet and then rebuying some crazy thing. You think they're buying gold, dude? You don't think they have enough gold?
No,
I mean, do they need more? They need
it's
more gold.
it doesn't tarnish, and you can
I
store
don't
it
know.
in the vaults of a central bank very nicely.
Dude, it has no value. Like it just has the value of what the futures
Larry, I
market.
get it, but it's an asset that's been outperforming humanity for thousands of years and will continue to do so.
Okay. Well, let me ask you a question. Okay. You buy baseball cards. Okay. That's
Yeah,
outperformed gold. That's
and
outperformed
basketball,
gold for the minute.
and unfortunately
My
basketball.
Pokemon
That
cards
I will
are
buy.
crushing the market 10-1. My
I
I
will
got
buy.
Charizard and all these other cards. I'm pulling them out of my kids. My kids have them in a drawer. I'm gonna start selling them, dude. That
Stop
you think
selling them.
that's not a problem? What value does that have?
Is so much value. You just don't understand it.
I don't. I
Uh,
don't. I know. It has value.
when you look
The
at the
only
card,
value it has, the only
especially when you
value
get
that it
like
has.
a numbered card, and you're like, it's scarce. I don't know. It's just
Okay, dude. And people, wait a second. They're going to want your rookie, whatever, Vladimir Guerrero card. Okay, when they need to get food at the grocery store, they'd rather have your card. Okay,
yeah.
they
I
got
know a
to
lot
have
of people that would rather buy a card than
Okay,
eat.
well, that dude, that is that. Listen, I'm looking right at your face right now, and that is the anatomy of a bubble. That actually is that you're saying that.
Let me ask
If
you a
you
question.
don't think
Okay. What about a Honus Wagner? You know that card, right? You know the card I'm talking about. What about a Babe Ruth, a Joe DiMaggio, a Mickey Mantle rookie, Nolan Ryan?
Listen, that only has value if somebody wants to buy it. And that is, listen, I'll tell you, I'm going to go back to 2008. You ready?
But the prices over time have just been going like this on those.
Until they don't. Until they
Okay,
don't.
drawdowns just like everything else, and maybe the
Eric,
market breaks.
so then why are you buying gold? Just buy freaking baseball cards or buy Pokemon cards.
You got to
Pokemon,
diversify. You know.
I wouldn't put one freaking red cent into a baseball card.
Oh,
Okay.
really?
I'm gonna tell you,
Oh,
I'm
really?
gonna tell you
You have
straight
art in
out,
your house. You have art, right?
I'm
You like
selling my art. I'm selling art right now.
okay.
I'm a net seller. I was a
Dude,
net
you've been saying
buyer.
you're gonna be selling art for years.
Talk,
You can't
please.
just let go of your beautiful art.
What are you talking about? I am selling art right now. I'm a net seller of art. Okay.
All right.
Art is up. Art is up in the last 10 years, 10 times more than the stock market. It's not going to last,
I
but right
wouldn't
now,
sell it. I think it will go even higher. So
I actually have a problem. I have a problem. I have a problem in the art market. And my problem is this. Okay. Listen, my generation, which isn't yours, obviously, because you're buying baseball cards and Pokemon cards and whatever. Okay. That they're printed. Okay. I mean, whatever. I'm telling you that, that I think that pop art, whether it be Andy Warhol, Lichtenstein, I think my generation wanted that stuff. And I think that the younger generation, even younger than your generation, like my kids, they don't want that crap. They don't care. They don't care. But what is the piece?
it's a one
What,
on one. These are scarce one on one. I think art.
what are you talking about? I have some art that's 100% one of one. Okay. I also have art that came in sets of 200 that have been broken up over dude, your baseball card is 3 years old. All the art is 50 to 100 years old. Okay. With dead people. Okay. All right. Listen, Honus Wagner's not alive. So I get that. Okay. But everybody else is. But meanwhile, as we're on the podcast, the S&P just collapsed and is red. Okay. So the bottom line is we may not get out of here today and
Whoa! Did you just say collapse? It didn't collapse.
collapse from the high. Yeah, that's a big move in our market.
Oh my
15
god,
handles.
bro!
15 handles. That's a collapse
Oh
in
my god,
15 minutes.
15 handles. You're a product of the times, dude.
Dude, listen, I am so ready for something to happen. I'm just watching the anatomy. I call it the anatomy of a rig. And the anatomy of a rig is this like, okay, so yesterday they took down the biggest stock in the world, right? The biggest stock, Nvidia, right? Am I wrong? Is that the biggest stock in the world?
Yeah.
Can we agree that the market cap of Nvidia is bigger than any stock in the world? The
Yes.
stock was down $5.50, $6, and the market could care less. This morning I walk in, Nvidia is up $3.50. Okay. And NASDAQ's positive. Now Nvidia is up $1. Okay. This is all gamesmanship by the computer.
The
That's all you're
rotation.
trading. What?
The rotation.
But why does there have to be a rotation? That's what I don't understand. Why? Why can't all seven Mag 7 stocks go down in the same day? Why? Why can't it happen?
I think because you said the market is ruled on a short term basis by a lot of quants from MIT that all they know is data and they have a lot of it now and they have the ability to analyze it all at once in real time. So the computer sees,
No,
okay, this
they're not time
went
out. You
down,
think they're analyzing data?
spread.
They
Yeah.
can't be analyzing data. What data? Like what data? There's no government report.
Can you look at the entire universe of stocks in real time? Can you? No. You can only look at two or three stocks at a time, right? As a
Eric,
human being.
they're manipulating all the stocks at the same time to get an
Right.
outcome.
Same
You
time. Right.
understand? At the
Yeah.
same
Okay.
time to
Completely.
get an outcome.
Right.
Okay? That's not analyzing anything. They're
Well,
creating it.
they can make the case there's some sort of statistical relative value mumbo jumbo something,
You
whatever.
can make the case of anything, but
Exactly. Exactly.
you can have fun, make the case of it. I'm making the case that they come up with exactly what they're going to do for the day. And you know what? I've seen it blow up. Everyone on this podcast has seen the computers shut down when volatility goes up because they can't rig the market. And then I don't know if you remember, like many, you have to think back because we haven't had a 10% correction in a while. Okay. But every time we have a 10% correction, it's the best trading we ever had because the computer's gone. The computer's out of the market. SPOOs are going up and down 30 points, up, down, up, down.
All right,
Now,
let me ask you a question. Let me ask you a
sure.
question. Let's say we finally get that 10% correction, and you just have the sigh of relief. You take a vacation. Finally, you come back after the 10% correction. Do you think the computers are going to be gone?
Do I think the computers are going to be gone? No. So
No,
what?
they're here forever, right? They're here to stay. That's it.
Dude, they're here to stay until they're not, dude. What if we have a 40% correction? You
All
think they're
right.
going to? I'm just
After the
saying,
40,
my
after
question
the
to
40%,
you, my
they'll
question
be
to
back.
you, Eric, my question to you is why can't we have an outsized correction that blows these guys out of the water? Why? Listen, Ronin Capital blew up. Lehman Brothers collapsed and went out of business. Why
Yeah,
can't we
because
blow the
when Lehman
computer
Brothers
up?
was collapsing, you were seeing that beforehand on the headlines. Hey, there's something wrong with Lehman. There's something wrong with the banking sector. Real
What?
estate isn't.
Now you're saying you knew it was going to happen before.
No, but
Oh,
everybody
so
was watching
you
it. I remember like before Lehman actually went
okay?
under, the stock
You're
was
dude.
dropping like 100.
You're a great carnival reader, dude. You're like the card reader, the tarot reader. Okay, I was trading it. I don't even know if you were trading in '08, but I was trading it. Okay, and let me tell you what. I was long Lehman Brothers into the collapse. Okay. I was long Lehman Brothers when it went out of business. Okay. I don't feel great about it. I didn't buy the stock at 60, 50, 40, 30, 20, or even I think I paid $13 for it or 12. Okay. Because the CFO came out and said they had operating capital and they had no issues. So what am I supposed to believe? The guy lied. Okay. The guy completely lied and they went out of business over the weekend. Okay. So the bottom line is, okay, these computers, I know you think they're here to stay and they can rig the markets and keep everything going the way it is. They can until they can't. Okay. And you may, and I'm not saying it'll happen, but you may read about an algorithmic firm of one of your favorites. I don't know which one it'll be, will blow up. Okay. Because listen, the data that they're looking at can be flawed and it could be wrong. And there's a lot of other things. There was there was an over-the-counter firm called Mayer and Schweitzer. I think that was the name of it. Okay. I don't actually it was if someone could write in, I forgot. It was the firm, they put the wrong quantities on trades and they went out of business in one day. An over-the-counter trading firm blew up in one day. One day on the opening, I was looking at the tape and we're like, how can this be going on? Look at these volumes. And they programmed the freaking computer wrong and they blew their firm up in 1 hour. They were out of business. Okay, so why do you think the computer can control what is going on? I'm just trying to understand. You don't think that they could take that out? That they can't, get away with one day selling Nvidia down 8, buying Apple up 9, why can't they take these guys out? I'm just trying to understand why you don't think they could take them out.
I think they can. I
They can.
don't really understand the question.
Well, the question is, you said when we have the correction or we have whatever, the computer's going to be back doing what they're doing. And the answer is, I don't know.
No, my point. You're asking why can't the market just fall 10% in one day? And I'm explaining. From my view, there's no big like macro domino to fall that is going to set off the
Oh,
domino effect.
dude, stop with the reasons, okay? Where were you in okay? Where were you in 1987? Were you like in a playpen playing like with toys?
I,
Where were you in 87?
I must have been in a playpen.
No, how when were you born?
83 when
Okay, so you were
WTI
4
futures.
years old. You
I
probably
was
had
born.
Matchbox cars. I
No,
was
no, no, I was
standing.
born. I was born when WTI futures came out.
Oh,
Literally that month.
really? Well, let me
Yeah.
tell you this. I was on the floor for the crash in 1987. Okay. I saw it. I lived it. I could not believe what I saw. We were wandering the street, okay, in lower Manhattan, right off of Wall Street on Broad Street. not knowing whether we had a job, whether the market was even viable. People were jumping out windows for legitimate real. Okay. I'm not saying that could happen again, but if you ask me what caused the crash, I can't even tell you. I can't tell you. They blame it on portfolio insurance, which I don't even know what actually that was. They blame it on, I don't even know. Tell me what caused, if anyone wants
Yeah,
to write in, tell me what
text,
caused the 1987 crash. I
yeah,
want to know what caused it.
the textbooks will say the portfolio insurance.
Portfolio insurance wasn't even 2% of the market. I mean, it was a zero, it was an excuse. Okay. The bottom line is that the market was exactly how it is now. Over exuberant, over exuberant, thinking it, total disrespect. I remember like it was yesterday, July of 1987. July of 1987, I was on the trading floor with a guy who I'm very good friends with still to this day. And we made a wager. The market didn't have a down day in the month of July. It went down one day, I think, in the whole month of July. And we're like, this is the craziest, same stuff we're doing now. This is the craziest thing I've ever seen. This doesn't make sense, whatever. Then the difference is we saw extreme volatility in August, okay, in the market in 1987. We couldn't handle that volatility. We were going up and down, and you got to remember the number was smaller, so it was a lot easier to move a percent on a $200 index or a $300 index, okay? The S&P was $300. So, it wasn't hard, to move 30, 20, 30 handles or 10 handles, okay? The bottom line is, okay, we picked up volatility. Then August was volatile. September kind of caught its footing. And then October got insane. And the Friday before the crash was options expiration day, which we only had one a month. Okay. And basically everybody got sided that day. And volatility exploded on Friday. And then Monday, we came in and the market basically opened down and then never came back. Okay. And it was down, what was it down? 30%. I mean, come on. Like, we are so tightly wound here, I can't even express to you.
Oh
Okay.
yeah, everybody keeps what they're looking for is price confirmation. They get it, they get in. So what's happening? Nobody's buying really dips. People are buying rips. It's a year where you don't buy low and sell high. You buy high and buy higher. You know, so that's why it's tightly wound because they like the market will go up, people will buy there, and you get all this volume at higher levels, and then any little bitty dip in the market just sets off gamma.
Yeah, but who's buying? Okay, because I'll just say this again. My friends have $10+ million stock portfolios. Okay, they're long 5 stocks, and they all have the same ones. They haven't made an additional purchase in over a year, maybe more. So I'm just trying to figure out who this is that's buying. I just think there's a lack of selling. The passives are never going to sell. Listen, I was talking to a buddy who's probably on this podcast right now about Bernie Madoff. Okay, you remember Bernie? Bernie basically got caught in 2008 with the biggest fraud Ponzi scheme in the history of Ponzi schemes, right? Guess what, Eric? He would have never got caught if '08 never happened. How would he have gotten caught? Tell me. Tell me how he would have gotten caught.
I can't even begin to tell you.
Well, think about it. Okay. The only reason why he got caught was because people redeemed, they needed money. They didn't even know. I had an investor who's a multi-billion-dollar family who I appreciate and endear. Okay. One of the wealthiest families in Manhattan. Okay. The guy called me up in 2008. And you know what he said to me? He goes, I had 30-day liquidity. He goes, Larry, listen, I really need money. I don't know where our money is. This guy owns buildings in Manhattan. Can I liquidate now? I gave him instant liquidity because I could get that because I'm so liquid. The bottom line is you don't realize what can happen. I'm not saying, listen, The rig is on right now, and these firms are, listen, it's rigged. I mean, and it's rigged.
Actually, look, I think there's some rigging within the algo firms, but I don't think there's that much of a conspiracy theory behind why the market is going up. I think it's I think the Fed, they know the Fed's got their back in the background. They
How
know
does the Fed have their back? The Fed
you,
just
you
said they're
it
going to neutral.
cut two
How,
times in a
how does the
row.
Fed have their back?
They're cutting into all-time highs. So,
They cut for no reason whatsoever other than the
and now
clear.
they're going to be expanding their
And now
balance.
they're out of the market. Eric, they're out of the
They're
market.
not. They're
But
not out of
listen,
the
I
market. They're
want to
going to
wrap in. I
take
want to
QE.
wrap in. I want to wrap in the next 3 minutes because we're close to the opening. So I want to, we gave these trades. S&P looked firm. It's not that firm. Today may be a good one. And if I believe if they come out with a negative ruling today, a full negative ruling on these tariffs, it could get very, very ugly today. I think.
The Tesla vote, yeah, definitely. The Tesla vote is coming out in the afternoon. What do you think happens there? Do you see a trade there? And before you say it, I just want you to understand most of the board backs Elon Musk. So I think the probability
Well,
of
I'm gonna go since I'm not following Tesla. I trade it all the time, but I do not have a position in it. I got word from probably someone that's on this podcast who's one of the best traders that I know that actually, started in his early 20s. I'm probably 15 years older than him, and sat next to him. He said that if the market rips or goes up off of that, it's a short. So again, I don't really know it. Um, for I haven't really read into it, but that's his call. But overall, interesting.
I'm looking at put spreads for November 21st on Tesla, and I'm going to pick the number 420 um, because I think that's one of Elon's favorite numbers. Uh, 420, and that put is trading at around 750. That could be an interesting sale on that. Do a put spread, $10 wide, you get about $2.
Hmm.
420 by
All right,
410.
we'll take a look at it. I'm surprised. I mean, Nvidia must have problems because it was up 3 this morning. It's up $1. Looks not great. It's actually up under $1 now. Doesn't look great. That's one to watch. You know, th-
So do you
these.
flatten your position? Like, the event is coming in the afternoon. Tesla's going to move, and therefore, the NASDAQ is going to move. Do you flatten your positions before that? Like, how do you?
No, I'm not worried about Tesla today.
No,
Don't you understand? I just spent 40 minutes on this podcast. Okay, actually 50 minutes on this podcast explaining to you that not one stock matters to the market.
mhm.
Tesla could be up 40 today and the NASDAQ could be down because they got some algorithm that'll sell four other things and rejigger. Okay. Right now, this algo is controlling the tape. It will not last for long. And like you're saying, we're going to have this big correction or we're going to have a correction. And then the algo is going to come back. Well, maybe, just maybe we can get our like I feel like we'll go on get our market back. Okay, but there's a lot to talk about. There's only 5 minutes before the opening. I want to reconvene this conversation. I'm going to be doing my ask me anything, so remember to write into me, okay, at feedback at the opportunistictrader.com. I will get to everyone's questions, and I really enjoy hearing the questions and having the ability to answer. But there's a lot to talk about. But there's an anatomy of, I mean, it's just unbelievable. That's all I could tell you. It's like, when have you ever seen? I've been trading for 40 years. It's like, okay, they're hitting X, so they're going to buy Y. I mean, come on. How can that work? How do they pull that off? I'm going to leave it to you. I want you to wrap us today. And I want to, because you're Mr. Algo. I'm calling you Mr. Algo. I want to understand the algo. Why, if they're selling Tesla, they're buying Nvidia or Apple? Why can't they sell it all? That's
Look,
what I don't understand.
instead of lamenting the fact that we have these MIT players in the market now, we just have to recognize that they're there and adjust accordingly. They're there and they're looking for these statistical relationships constantly, and they're doing it by analyzing every single stock on the board at the same time. So
I'm gonna interrupt you and leave you with this, okay, on my
you
side, and
got to
I'll let
work
you
within
go
the
back.
system.
I'm gonna leave you with this. If they
Work
didn't have
within
high
the system.
speed front running equipment, these MIT guys would be losing their ass. That's all I can tell you. They're paired with a front running piece of equipment that basically gets them in and out faster than anyone else. As
A
a
lot of them
regular
don't even know
MIT
what a
guy,
dividend is.
listen, I'm a
Listen,
Syracuse University grad and I can school them in the market all day, every day. Now, with what they have at their disposal and the cheating tools, I can't. But as far as knowledge, information, access, etc., I have them beat. They don't care. Okay. They put up clues that are fake clues. Dude,
oh,
look at the market on
I've seen
closing
quants turn
balances.
white. I've seen quants turn absolutely white when their algo would break.
Why? They just blame it. Listen, I've seen it for years, and I'm going to not interrupt again. I apologize for that. But I've seen it for years. And we used to hire Harvard grads, Penn grads, Princeton grads to trade on the floor. These guys couldn't make a dime. Oh, now
Yeah,
they're crushing the market because they're fooling the market with all these fake clues. Like, how about I'm going to leave it on my end with this, and I'm sorry I'm running late today. Okay, the market on close imbalance used to be a great tool. We could trade it all the time. The market on close imbalances are now a spoofing tool, spoofing, which means fake, manipulation for the algo to set himself up to basically set the market off. So I'll leave it with that. You can finish up. I'm going to give you a minute and close us out.
we don't have a minute. It's 9:27. I wish everyone a great day. Make money
Peace,
and
everyone.
watch out for
Enjoy.
Larry's tonight. It should be good.
All
Good luck,
right.
man.
Appreciate it. Have a great day.